Are you tired of watching others grow their wealth while you're still wondering how to start investing? Does it feel like everyone else is making money in the market except you? Listen, I get it. Investing can seem intimidating, especially with all the complex jargon and strategies out there. But what if I told you that getting started is easier than you think? In this video, I'll guide you step by step on how to start investing like a pro in 2025, even if you're a complete beginner. We'll cover everything from understanding the basics to choosing the right investments and avoiding common pitfalls. By the end of this video, you'll have the knowledge and confidence to take control of your financial future and start building wealth like a pro. So grab a notebook, get comfortable, and let's dive in. Now, you might be thinking, why 2025? What's so special about it? Well, my friend, 2025 is shaping up to be a pivotal year for investors, especially beginners. The financial landscape is evolving rapidly, and 2025 is set to be a landmark year for several reasons. First, let's talk about technology. Financial technology, or fintech, has come a long way, and it's only getting better. Innovations in this space are making it easier and more accessible for everyone to invest. We're talking about apps and platforms that make investing as easy as ordering a pizza. Imagine having the power to manage your investments right at your fingertips, anytime, anywhere. Remember the days when you had to call a broker and pay hefty fees just to buy a single stock? Those days are long gone. Today the barriers to entry are lower than ever. Yeah, those days are long gone. Now you can open an account with a few taps on your phone and start investing with as little as $5. That's right, $5. It's never been this easy to get started. But it's not just about convenience. The rise of robo-advisors and automated investing platforms means you don't need to be a financial expert to get started. These tools are designed to help you make smart investment decisions without the need for extensive knowledge or experience. Today, you can open an account with a few taps on your phone and start investing with as little as $5. That's right, $5. It's never been this easy to get started. But it's not just about convenience. The rise of robo-advisors and automated investing platforms means you don't need to be a financial expert to get started. The rise of robo-advisors and automated investing platforms means you don't need to be a financial expert to get started. These platforms use sophisticated algorithms to build and manage your portfolio for you, taking the guesswork out of investing. These platforms use sophisticated algorithms to build and manage your portfolio for you, taking the guesswork out of investing. They analyze market trends, diversify your investments, and even rebalance your portfolio as needed. And here's the best part. Many of these platforms charge minimal fees, putting more money back in your pocket. Lower fees mean higher returns over time, which is great news for your financial future. So whether you're saving for a down payment on a house, your dream vacation, or just a comfortable retirement, there's never been a better time to start investing than now. The earlier you start, the more time your money has to grow. So why wait? Start your investment journey in 2025 and take control of your financial future.
I got an idea!
Before we jump into the specifics of investing, let's talk about the right mindset. Having the right mindset is crucial because it sets the foundation for all your investment decisions. Without it, even the best strategies can fail. You see, successful investing is not just about picking the right stocks or timing the market perfectly. It's about understanding the principles that guide your decisions and having the discipline to stick to them. It's about adopting a long-term perspective and sticking to your plan even when things get bumpy. Market volatility is inevitable, but your response to it can make all the difference. The first thing you need to understand is that investing is a marathon, not a sprint. Just like a marathon, it requires endurance, patience, and a well-thought-out strategy. Forget about getting rich-quick schemes. Those are just recipes for disaster. They promise quick returns, but often lead to significant losses. Real wealth is built slowly and steadily over time through the power of compound interest. Compound interest allows your investments to grow exponentially as the returns you earn start to generate their own returns. Think of it like planting a tree. You don't expect it to grow into a mighty oak overnight, do you? It takes years of nurturing and care for it to reach its full potential. It takes time, patience, and consistent nurturing. The same goes for investing. Regularly reviewing and adjusting your portfolio is essential to ensure it aligns with your long-term goals. Second, stay consistent with your investments. Consistency is key to building wealth over time. The key is to invest regularly, no matter what the market is doing. This approach helps you take advantage of market fluctuations and reduces the risk of making poor decisions based on short-term market movements. This is called dollar cost averaging, and it's one of the most effective strategies for long-term growth. By investing a fixed amount regularly, you buy more shares when prices are low and fewer when prices are high, averaging out the cost over time. And finally, don't panic when the market dips. Market downturns are a natural part of the investment cycle. Market fluctuations are normal, and they're actually buying opportunities in disguise. When prices drop, it's a chance to buy quality investments at a discount. Remember, when others are fearful, that's the time to be greedy. This principle, famously advocated by Warren Buffett, encourages investors to take advantage of market fear and buy undervalued assets. By staying calm and sticking to your plan, you'll come out ahead in the long run. Your ability to remain composed and focused on your long-term goals will ultimately determine your success as an investor. Now let's talk about where you should put your money to work. Investing can seem daunting at first, but with the right approach, it can be a rewarding journey. The key is to start with investments that are straightforward and manageable. As a beginner, it's best to start simple and stick to investments that are easy to understand and manage. This way, you can build your confidence and knowledge without feeling overwhelmed. One of the best ways to get started is with index funds and ETFs, or exchange-traded funds. These investment vehicles are designed to track the performance of a specific index, providing a broad exposure to the market. These are like baskets of stocks that track a particular market index, such as the S&P 500. By investing in these funds, you are essentially buying a small piece of many different companies, which helps to spread out your risk. They offer instant diversification, meaning your money is spread across hundreds of different companies, reducing your overall risk. This is particularly beneficial for new investors who may not have the expertise to pick individual stocks. Another solid option is blue-chip stocks. These are shares of large, well-established companies that have a history of reliable performance and profitability. These are shares of large, well-established companies with a proven track record of profitability. Investing in blue-chip stocks can provide stability and steady growth over time. Think companies like Apple, Amazon, or Google. These tech giants have consistently shown strong performance and are leaders in their respective industries. While individual stocks carry more risk than index funds, they also offer the potential for higher returns. If you have the time and interest to research and monitor these stocks, they can be a lucrative addition to your portfolio. Real estate crowdfunding is another exciting avenue for beginners. This method allows you to pool your money with other investors to fund real estate projects, making it accessible even if you don't have a large amount of capital. This allows you to invest in real estate projects with as little as a few $100s, giving you access to a traditionally exclusive asset class. It's a great way to diversify your investments and potentially earn passive income. And of course, we can't forget about cryptocurrencies. Digital currencies like Bitcoin and Ethereum have gained significant attention and can be a part of a diversified investment strategy. While crypto can be highly volatile, it also offers the potential for significant growth. The key is to approach it with caution and be prepared for the ups and downs. However, it's crucial to do your research and invest only what you can afford to lose. By staying informed and diversifying your investments, you can navigate the world of investing with confidence and success. Chapter 4. How much should you invest? Now you might be wondering, how much money do I actually need to start investing? The good news is, you don't need to be rich to get started. Even small amounts can add up over time, thanks to the magic of compound interest. A good rule of thumb is to follow the 50-30-20 budget rule. This means allocating 50% of your after-tax income to your needs, 30% to your wants, and 20% to savings and investments. Needs are your essential expenses, like rent, groceries, and transportation. Wants are things you enjoy, but don't necessarily need, like dining out, entertainment, and travel. And savings and investments are what you set aside for your future goals. Now, I understand that not everyone can afford to save 20% right off the bat. That's okay. Start with whatever you can, even if it's just 5% or 10%. The important thing is to get into the habit of saving and investing regularly. As your income grows, you can gradually increase your savings rate. And remember, even small amounts can make a big difference over time. Now that you know how much to invest, let's talk about where to invest. Thankfully, there are tons of user-friendly platforms designed specifically for beginners. One popular option is Vanguard. Vanguard is known for its low-cost index funds and ETFs, making it a great choice for hands-off investors. They offer a wide range of investment options, from target date funds to sector-specific ETFs. Another great platform is eToro. eToro is a social trading platform that allows you to copy the trades of experienced investors. This can be a great way to learn the ropes and potentially boost your returns. And if you're looking for a more traditional brokerage platform, you can't go wrong with Fidelity. Fidelity is a well-established and reputable company with a long history of serving investors. They offer a wide range of investment products and services, as well as excellent customer support. When choosing a platform, consider factors like fees, investment options, ease of use, and customer support. It's also a good idea to read reviews from other investors before making a decision. Now, before you rush off and start investing, let's talk about some common mistakes to avoid. These pitfalls can trip up even experienced investors, so it's important to be aware of them. One of the biggest mistakes you can make is trying to time the market. This means trying to predict when the market will go up or down and buying or selling accordingly. The problem is even professional investors with years of experience struggle to time the market consistently. Another common mistake is investing without doing your research. Don't just blindly follow the latest investment trends or take stock tips from your Uncle Bob. Take the time to understand the fundamentals of the companies you're investing in, their financial health, and their growth prospects. And finally, don't ignore fees. Fees can eat into your returns over time, so it's important to choose low-cost investment options. Pay attention to expense ratios on index funds and ETFs, as well as trading commissions and account maintenance fees. Congrats! You're now ready to start investing like a pro in 2025. Remember, investing doesn't have to be complicated. By following the steps outlined in this video, you can take control of your financial future and start building wealth like a pro. If you found this video helpful, smash that like button, subscribe, and drop your questions in the comments below. And remember, the best time to start investing was yesterday. The second best time is today. So, what are you waiting for? Go out there and start investing. So there you have it. Everything you need to know to start investing like a pro in 2025. Remember, the key is to start small, stay consistent, and don't panic when the market takes a dip. Think of it like this: every dollar you invest is like a little employee working for you 24/7, generating more money even while you sleep. Now I know some of you might be thinking, Graham, this is great and all, but what about taxes? Don't worry, I got you covered. In my next video, I'll be breaking down everything you need to know about taxes on your investments, so you can keep more of your hard-earned money. So, make sure you hit that subscribe button and turn on notifications so you don't miss it. And as always, thanks for watching.